Hello, everyone, and welcome to Schwab Coaching. My name is Cameron May. I'm a Senior Manager of Trading and Derivatives Education here at Schwab, and this is Getting Started with Thinkorswim. Today, we're going to be working on building out our charting toolbox, and specifically, we're going to be looking at the 8 Fibonacci drawing tools that are available on charting. I think a lot of us are familiar with Fibonacci extensions, but I think not so many are going to be familiar with the other 7 Fib drawing tools. So we're going to get into how they're constructed, how they might be used to plan and place a trade, a lot to cover. Before we get to any of that, though, let me first of all say hello to everybody who's chatting in out there in YouTube. Always good to see the returning veterans. Great to see anybody who's here for the very first time, but hello there, Scott and Robert, Life in the Fast Lane. We have Eva and Sandra, Olga, and everybody else. Thanks for joining us week after week. We always appreciate your attendance and your contributions to these discussions. If you are among those who are here for the first time, I want to welcome you as well. And if you're watching on the YouTube archive after the live stream is concluded, enjoy the recording. It's a great way to watch these webcasts, but you're certainly invited to join us in the live stream. This is a Wednesday webcast series. We kick things off promptly at 2 Eastern time. Now, I also want to let you know that my very good friend Brent Moores is hanging out in the chats with us. Brent's going to be addressing any questions that I can't get to just during the flow of the presentation. I started as a coach more than 21 years ago, and Brent was there to greet me on day one. So we've been working together for a long time. Great to have Brent there. Thanks for having my back there, Brent. Brent and I would also like to issue an invitation to everybody watching, whether live or on the archive, to follow your favorite Schwab presenters on social media. You can find and follow Brent and me on X and also on LinkedIn. So you can find Brent on X at MooreCS. You can find me on X at Cameron May CS, or you could pop over to LinkedIn. Just go to linkedin.com/in/Cameron May CS. But let's get into this discussion of Fibonacci drawing tools. There are 8 of them. Chat in, let me know how many are you already familiar with. 0, 1, 2, 3, 4, 5, 6, 7, or 8. But as I get that input, let's go to the disclosures. This is important information. Trading and investing, even when supported by chart efforts, certainly carries risks. So just bear in mind that all corporate or issuer names and market data shown are for illustrative purposes only and are not a recommendation, offer to sell, or a solicitation of an offer to buy any security. Schwab does not recommend the use of technical analysis as a sole means of investment research. And investing involves risks, including the loss of principal. All right, so with that important stuff accomplished, let's set the agenda for today. Today is all about using the drawing tools on Thinkorswim. We're talking about Fibonacci drawing tools. So what we're going to do is just go to the menu of Fibonacci drawing tools and just go through them left to right, top to bottom, just progressing through how they're built and how they might be used to generate trade signals on a chart. But the very first thing that we're going to do is we're going to talk about the numbers that underpin all of the Fibonacci drawing tools, something known as the Fibonacci sequence. All right. And then finally, we're just going to apply these tools to example charts so that we not only learn the theory of how they might be used, but we also get some repetition with the application. All right. All right. Looks like Bogus Chinchilla is familiar with 3 of these. Richard is 2. It's actually pretty strong. I think that'll probably, we got 70 people watching a live stream right now, and I would guess hundreds, maybe thousands will watch this after the fact. The majority are not going to know very many more than maybe one of these tools. So let's go right to the Thinkorswim platform. So this is the simulated trading environment known as Paper Money on the Thinkorswim desktop platform. And we're just going to use Apple. What we're going to do is just bounce around, apply different tools on different time frames, and just kind of get familiar with them as we discuss them. But the first thing I need to talk about is sort of the mathematical theory that is underlying all of these tools. And it's all built around a sequence of numbers known as the Fibonacci sequence and ratios of those numbers from the sequence. So let's acquaint ourselves with the Fibonacci sequence. If you've seen my Fibonacci discussions before, you know what this sequence is, or if you've just learned it on your own. But I would recommend, if you have a deeper interest in specific Fibonacci trading tools and techniques, you may want to check out our other Fibonacci related material on our channel. So if you haven't subscribed to our channel yet, make sure you do that. Pop down, click on the subscribe button down below the video. Doesn't cost anything to subscribe to Trader Talks Schwab Coaching webcasts on YouTube, but that's where you can find our live streams like this one, find and join them. You can find our playlists of previous webcasts, or you can even do a search through our archives of videos for topics of specific interest. So as an example, let's type in Fibonacci, 1 N, 2 C's, hit enter on our keyboard, And here's a previous discussion where I went through 5 of these tools. We're doing all 8 today. I'm feeling a little bit more ambitious, and that was a long time ago. Thought it was time for an update, but maybe this one, Beginner's Guide to Using Fibonacci's to Trade Stocks, or this discussion right here, Fibonacci Retracements, Finding Key Support and Resistance. All right, but lots of tools for lots of educational resources for understanding these tools. Eva, go address that problem. We'll see you again. Sorry to hear about that. Let's see. Trader Joe says it's interesting that Fibonacci sequences exist even in nature. Right. Yeah. So let's get acquainted with the Fibonacci sequence. So it all starts with the humble number 0, and then we progress to 1. Actually, let me make sure this is bold. Just makes it a little bit easier to see. But it starts with 0 and progresses forward 1 number to 1. And then what we do from here is we just add each sequential number to the one just before it, and that produces the entire sequence. So 0 plus 1 is 1. 1 plus 1 is 2. 1 plus 2 is 3. 2 plus 3 is 5. And we just carry that out. So let me just type these in kind of quickly. We got 21, then we get 34, and we get 55, and then 89. And on that sequence of numbers goes ad infinitum. All right? So that's the Fibonacci sequence. And from this can be generated a series of ratios. So for example, if we take a number in the sequence and divide the number just before that. So let's come up here and use our calculator. How about we use 89, divide that by 55. That gives us something that's sometimes referred to as the golden ratio. I'm not going to get too far into that, but just know it produces the number 1.618. Or if we reverse that order, instead of dividing 89 by 55, maybe we take 55, divide that by 89, we get 0.618. And then if we just move further down the sequence, let's take 34 and divide that by 89. These ratios are the genesis of the tools that we're going to be using in just a moment. So 34 divided by 89 gives us 0.382. And if we move one number over further to the left, 21 divided by 89 gives us 0.236. So these are known as the Fibonacci sequence numbers, or Fibonacci sequence ratios. Now there's another ratio. And as a matter of fact, let me skip to our first drawing tool. Let's come up here and here are our Fibonacci tools, by the way. We have retracements, extensions, time series, time ratios, time extensions, arcs, fans, and spirals. So there are 8 Fibonacci tools. Let me just quickly slap on a Fibonacci retracement. How about we go back here to September? I'm going to look for a big strong move to the upside, go to the top of that up move and click once, go to the bottom of that move and click again. And what we're left with, I'm going to zoom in on this a little bit so we can see these numbers a little bit more clearly. You'll see this sequence of numbers, and you'll notice that these are starting to pair up pretty neatly with these. 0.618, hey, 61.8. 38.2, there's a 38.2. 23.6, there's a 23.6. But we have another number, 78.6. A lot of you may have already been familiar with these ratios. Where does the 78.6 come from? How is that generated? This is an extra gold star bonus point for anybody that knows this one. You want to start chatting that in madly while I produce it on your screen? Here's how it's generated. We take the 0.618, 1.618 and 0.618 are both considered to be what's known as the golden ratio. You can look it up and explore its implications for mathematics, for biology, and potentially for trading. But if we just take the 0.618 and we get its square root, this is the one that's probably the most obscure. We get a number 0.785, round that a little bit, you'll notice there it is. Okay, I'm going to round that to 0.786. The larger the number, the more we carry out those numbers, the closer that'll get to the 0.786. Anyway, so there are Fibonacci ratio numbers, but you'll notice there are 3 other mystery numbers that are not considered to be Fibonacci numbers. They're just more a description of the line that we've drawn here. So in this case, I've drawn a line from this low to that high. So this is where it started. We start at 0, we progress to 100, and then the halfway point is 50. So that's it. That is where all of our lines come from. They come from this sequence of numbers and this series of ratios. So now that we understand how the numbers are generated, let's understand the implications for traders. And this kind of does tie back. Who was it that says, yeah, Trader Joe said that it's interesting that Fibonacci sequences exist even in nature. Yes. So there's something that we'll be exploring a little bit later, known as a Fibonacci arc, that that is sometimes stated to be representative of the chambers of a nautilus shell. I don't know if you know what a nautilus is. It's that weird little snail-looking squid creature with little squid tentacles sticking out its shell, and it sort of squirts its way along through the oceans. Yeah, that's a nautilus, and if you cut that, if you bisect that, you see that it has little chambers that grow in sequential order in size, and some have observed that the increasing size of those chambers seem to adhere to a Fibonacci sequence fairly well, or the branching of tree limbs, or even the veining of the leaves on a tree. Yeah, may adhere to Fibonacci sequences. Now, I think that those are sort of more or less true. There's some truth to it. There's some sort of fudging the edges of the numbers on that, but mathematicians have found a lot of interesting things in this Fibonacci sequence, and traders have kind of adopted that. They have noted that there can be interesting commonalities in apparent proportions of moves on a stock chart. So they've created a series of tools to gauge those moves. So the first one here is our Fibonacci extensions tool. Let me show this again. Let's just start from scratch. I want to right click on the drawing that I've already made and just remove that, because drawing it correctly is important. So I'm going to zoom back out here on our chart. Let's make sure that we've selected the percentage icon for the Fibonacci retracements tool. So really what the trader is looking to do here, Fibonacci's universally are typically used to identify potentially important reversal points on a chart that haven't manifested, that haven't happened yet. So those reversal points might be support or resistance lines in the future. Now that's a tough thing, that's a tough task, trying to anticipate where a stock is likely to reverse its direction in the future, either going from downer move, hitting lows and starting to go up, or an upward move, hitting future highs and starting to head down. But that's the concept here. And what all the Fibonacci tools use is historical price activity to try to anticipate where future price activity might take us. So that's going to be sort of the underlying logic of the drawing of our first tool, and that's the Fibonacci extension. So now that we've selected that tool, one thing that the trader might look for first is they'll watch for a stock to make a very strong move in one direction or the other. And so I'm looking back here in September as just an example. Here was a very strong move upward. It started to tail out, but persisted right up to about here, about to maybe October 3rd or so. So I'm going to go to the top of that move, and this is where I said it's important to draw these things correctly. I'm going to start my drawing at the top. Go to the top of the move, click once, and then I move to the bottom and click again. And what that does is it draws a whole series of horizontal lines. Some lines within the drawing that I've made, and some lines beyond the drawing that I made. These are called extension lines, hence the name of the tool, Fibonacci extensions. And these lines are commonly used by traders in an effort to anticipate potential future areas of support and resistance. So for example, when a stock makes a really strong move up, as Apple appears to be making right now, I think it's natural for some traders to wonder, well, how far back might that pull if and when it starts to pull back? So that's the initial use of our Fibonacci. And within that pullback, let me zoom in here. When there's a strong move to the upside, one historical proportionate move to the downside, one tendency seems to be the stock pulls back somewhere on the order of about a third to about a half of the distance that it just advanced. So in that case, that might align pretty well with our 61.8 and our 50% retracements. So for some traders, when there's a strong move to the upside, they'll draw on a fib and they'll look for a retracement where price falls back to between 61.8 and 50, and then plan for maybe potentially new bullish entries at that point. So that's an initial usage, finding support levels. Also finding future resistance levels. For example, our trader might just look for the price to rise back up to the previous high. That may be a new resistance, getting back to the 100% line. Or they might look for an extension of price. Let me zoom back out here. They might look for price to rise up a distance equal to the original move, starting from a 61.8% line retracement. So a move equal to this move might take us from here to there, to 161.8. So the way that's generated, it's just 100% of this move added to the 61.8 retracement. So those are the extension lines. So I think you can see, I'm not going to get any further into how extensions might be used for trading, but I did at least want to introduce you to the construction of the tool, the potential application of the tool, and at least one example of how it might be used to plan entries and even potential exits. Now, obviously, with each of these, there's no guarantee that a trade is going to work just because we made a drawing on a chart. So the trader might want to have a plan for trades that go against them. But there's the Fibonacci extension. That one, I think most of our viewers are already familiar with. But now let's get a little bit deeper into the technical weeds here, explore a second Fibonacci tool. I'm going to remove this one. And how about we come down, let's switch to our Fibonacci extensions. Pardon me, I said extensions. Sometimes I get a little excited and I'll use the wrong term, the wrong label when I'm planning to talk about 8. Forgive me if I'm drawing one and refer to another one. It's going to happen probably. So our first one is retracements because we're measuring the retracement. The next one is extensions, the Fibonacci extension line. And this one, let me just clear up our drawings here. There we go. Let's go back to this same move. Fibonacci extensions are built on, you might think, short-term stock cycles. So our retracement was just one big move. Well, a true stock cycle, or a definition of the stock cycle, would be an advance in stock price followed by a retracement, moving from one low to the next low, or in the case of a bearish cycle, one high to the next high. So Hailu says, what if we draw it from the April low to the June high? I'm not going to be doing too much experimenting with much repetition. My apologies. 8 tools is a lot to demonstrate in one webcast, but be sure if you're intrigued by these tools, just experiment with them in your own paper money account so you can get acquainted with it. And this is not a promotion of these tools to you. It's just an introduction to how the tools are used, make you aware of the resources that are available on the Thinkorswim desktop platform, and then each trader can choose for themselves which tools they're going to use. Anyway, but the Fibonacci extensions recognize that stocks tend to move in these little short-term cycles. And so traders will use the entirety of this cycle to project where the stock might be moving next. So we're going to select our Fibonacci extensions tool. And we start now at the beginning of one of these cycles, which is a low. We look for a run up. That was about here. Let's click at the high. And then we're going to continue. So our third click is going to be down at the bottom of that cycle. So we're going from low to low. And then the tool is automatically going to be drawing on extensions in this case. So no retracements, nothing going down toward the bottom. But in this case, we're extending upward and drawing in potential areas of support and resistance from here. And you'll notice in this case, yep, previous highs acted as a pretty good resistance. Lows were pretty good support. And we're still working on maybe hitting a more distant extension, but it is interesting. We did get to that 161.8, but boy, it took a little bit of time. But that is how the Fibonacci extensions tool is typically used. Just remember, draw from low to low if that's useful. Click, 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 and then the Fibonacci extension is applied. All right, so that's two of our tools. Our next tool is going to be implementing price levels with time. It's an intersection of two variables in identifying reversal points. So not just an attempt to project where the price might reverse, but also when it might reverse. That's a tall task. Let's see if our time series can do it. Oh, you know what? Apologies. I told you I was going to get ahead of myself. Um, that's actually ARCs. When we get to our discussion of ARCs, I'll be talking about a combination of time and price. Right now, we're just going to introduce the element of time. Anyway, let's go here, go to our third tool, and we're going to use the Fibonacci time series. And there are three tools here. They're going to draw fairly similar results based on time. This first tool is just going to be sort of a one-click and you're done technique. So with the application of a time series, typically the trader looks for a major reversal point. It might be a low, it might be a high. How about we switch to highs for just a moment? Let's look at maybe October. See this big red candle. We ran up sharply, got a big red, kind of almost a bearish engulfing there. But we just pick our date and we just click once. Doesn't matter where. We could click up here as long as it's in line with our date, or down here or right on the candle. But as soon as we click, this applies a series of lines out from that first day. So how are these lines determined? Well, here's how they're determined. What we'll do is click to start drawing that line, and then we just sort of move over and click again. And that just tells the system that, yep, we've selected the day. We have the day that we intended for the introduction of our time series. And then these lines are just drawn out according to this sequence. So the first line is drawn at that's day one. And then we go out one more day. Then we go out 2 days, and then 3 days, and then 5 days, and 8 days, and 13 days, and so on. So that's how the time series is determined. It uses the numbers in the sequence. And the way the trader might use that is that sometimes when price intersects with one of those time series, that may signal, it's not a guarantee, but it might mean the stock is about ready to make a change in direction. Kind of see that here. We got kind of an intraday or an intra-series change, but here we had a reversal in direction. This one, it was maybe a little bit early. There's another reversal in direction there. So that's the concept of a time series. It's that if price has already been moving a certain distance for a certain period of time, maybe the buyers are getting exhausted and the sellers might come in. Or if the stock has been selling off for a period of time, maybe the buyers see bargain opportunities of time to buy in. But how do we gauge that? Well, we use the Fibonacci sequence, and it's constructed using the number of days in accordance with the numbers in the sequence. So there's your introduction to the Fibonacci time series. I think that one's fairly intuitive. Again, to draw it, let me get one more repetition. Let me clear this whole drawing set. We just pick a reversal point. It might be this high, it might be that high, it might be this low, it might be that low. Just pick a reversal point and click. Oh, I already switched off to a different drawing tool. Let me just remove that one. Let's change it to our time series. Find a reversal point and click on it. Hello there, Mauro, good to see you. And then when we're satisfied that we have it in the right place, we click again. Oh, one other thing that I'll point out here, let me remove this drawing, is if we start to draw a line, let's say that we intended to put it on this high, but we start it somewhere else. As long as we haven't made our second click yet, we can move to the left and it repositions our time series. Okay? Notice that. Further I move to the left, it's just repositioning and drawing out that time series. So once I'm satisfied with where I have it, then I move to the right, click on that, move to the right, click again, you're good. All right, let me clear this up. Oop, let me right click here. Let's delete, let's just clear all the drawings. All right, next tool in our toolbox is the Fibonacci time ratios. Very similar to the time series, but slightly different. And the ratio is the hint. Here, instead of using the sequence of day to create our number of days, 1, 2, 3, 5, 8, and so on, this is using the ratios. So if I choose that ratio box, I'm going to click where I want to start my drawing. And then I'm going to choose where I end my drawing, and then everything else is going to be a ratio. Let's move this far enough out so you can see. There are our familiar ratios. So it's kind of like if we took that Fibonacci retracements tool and we just tilted it on its head or on its side. Does that make sense? So this is not an effort to project where price might reverse, but when that price might reverse. So that one's not too difficult. Let me right click, remove that drawing. Now finally we have a third tool, and it's based on the Fibonacci extensions tool. You know how with the extension we were looking for those cycles. And we click at the start of the cycle, we click mid-cycle, we click at the end of the cycle. Well, the same thing can be done using the Fibonacci. Let's choose that tool. Our Fibonacci time extension. So the other tool was just called the Fibonacci extension. This is a Fibonacci time extension. So how about if we go back to that October move? Here's that big move to the upside. Let's say we click at the bottom of that move, go to the top, and then maybe we move down to the bottom again. Here could be some discretion. It depends on the trader with where they position at. We'll just maybe put that right there. So we're looking for a short-term cycle. Click at the low, click at the high, click at the low again. So 3 clicks for this tool. And then that produces the extension, but across time. All right. And that, in this case, the trader might be looking for, if they're bullish and we start to cross one of those extension lines, maybe that's time to take profits if we're profitable. On the other hand, if we're looking for entries, they might be looking for, across one of these extension lines. Here we got a little bit of an entry. It didn't really work out very well. This one we kind of flagged sideways for a while after the crossing that extension line. In this case, we started to rally. But no indicator is, no technical tool or approach is perfect. And my purpose today is just to introduce the construction and the application of the tool, just the how to do it. And then you can just get some repetition on your own if you're intrigued by these tools. So we've looked at tools that look at price levels. We've looked at tools that look at time periods. Now we're going to get to those that combine the two. And I want to use Fibonacci arcs first to do that. Okay, we're going to look at a couple that combine both time and price. But we're going to start with, well, let's clean up our chart here again. Right click. Let's remove this drawing. Let's come down and choose our Fibonacci arcs. How many of you have used Fibonacci arcs before? So Fibonacci arcs, again, we're going to look for a very strong move to the upside. Here, actually, this is the biggest move of the year with very little bit of interruption. This one was just a strong move, but a little bit more wobbly of a move back here. How about we draw an arc right down here. So this one, we go to the bottom, click once, and then we move to the top and click again. And what this is doing is combining time and price. So what the trader is looking for is, yes, there's a move to the upside. As we move down, how far might that move, and when might it reverse? So in this case, got fairly close. It was a little bit of a miss there, I would say. Then we moved down to the next arc, touched pretty well off of that arc, and started moving to the upside again. And then we can maybe look to exit as we get to the next arc or to the one beyond that. But just be aware that the Fibonacci arc is a combination of the two, and we can actually illustrate that. Let me squish this down a little bit. If I were to draw a Fibonacci retracement on here, Let's go to the top of this arc. Let's move down to the bottom. And you'll notice there's intersections of, I didn't get this exactly right, but close enough. You'll see that the arcs and the lines intersect pretty well. There, here, here, right up here. Yep, they're based on the same premise, just introducing that element of time. Now, let's remove that one. There's our Fibonacci arc. Let me switch this. So when we start to play with the right margin here, to set that back to its defaults, quick way to do that is right up here under the price axis settings. If I click on that and I just change that to auto, it automatically adjusts it back to where it was before we started tinkering with it. But our sixth tool is a Fibonacci fan. And a Fibonacci fan, rather than attempting to draw horizontal lines, or rather than attempting to intersect price with time, this uses a trend line. So it's actually a Fibonacci ratio of a trend line that we've drawn. So if we find, let's say, a trend that has started to emerge, what we might draw is from the low to the high of that trend. Maybe it's a shorter term one, maybe it's more of an intermediate trend. But let's use our Fibonacci fan tool and just think in trend terms, okay? So it looks like we had kind of a move starting right down here. And then we rallied up to this peak up here. There we go. And what this does is it draws all additional trend lines, but these are at Fibonacci ratios distant from the original. So it's going to take the distance from wherever we draw our trend line to basically zero trend, so flat. And then we're going to divide that by the three ratios, the key ratios that it uses: 38.2, uses the 50% retracement, and then 61.8. So that's what these lines are. And then the trader might use those as potential areas of support and resistance. And this, it might take a little bit of repetition with this to get the application to where the trader thinks they have it correctly positioned. But let's experiment with maybe a couple of others. What if we started at this high, move to that high? I'm just showing variations. Mark says fat cats push Sharpe ratio. Okay, anyway, sounds like a little discussion of the Sharpe ratio going on. Sharpe ratio is basically a risk-adjusted ratio. A little bit off topic. I wouldn't be able to get into that today. Mark says you need to learn technical analysis. Well, that's what we discuss not always in this webcast series. This is just the Thinkorswim platform in general. But if you check out my Friday webcast series, it's called Advanced Charting Techniques. That's all about technical analysis. Or there's another webcast series in our that we do every week. It's called Getting Started with Technical Analysis. All right, but those are our Fibonacci fans. Let's clear those off. And there's one more, and that is a Fibonacci spiral. Now this one, I had to debate with myself how deeply I wanted to get into the construction of a Fibonacci spiral. And let me do this. So a Fibonacci spiral, if you can actually Google one and look up a Fibonacci spiral, but it's based on a set of squares drawn in accordance with our Fibonacci sequence. So again, our sequence is 1, 1, 2, 3, 5, 8, 13, 21, and so on. So here's how, let me see if I can do this any justice. Let's say that we draw a 1 inch by 1 inch square box. And then we draw another one, 1 inch by 1 inch. So there's 1, and there's 1. That lines up with our sequence, 1, 1. 1 plus 1 is 2. You'll notice that these two combined allow us to draw a 2-inch square box up here. And then if we take our 2 plus this 1 and we draw the third number in the sequence, this is a 3 by 3 inch box over here. And it's not always inches. It could be any unit of measure. It could be a tick on a price chart. It could be a centimeter. It could be a foot. But in any case, we just work through that Fibonacci sequence, drawing a series of boxes. Do you see that? 1 plus 1 is 2. Allows us to draw a 2-inch box up here. 2 plus 1 is 3. 3 plus 2 is 5. So if we have a 2-inch line over here and a 3-inch line over here, now we can draw a 5-inch box. I think you get the point. Mike, you say you just got here, you lost already? Well, Mike, I'm going to be making some drawings on the chart, and I just wanted to show where the drawings come from, what the math is that's behind the drawing. So here's the arc. Through all of that, what we do is we just start in the very first box that we drew, and we draw a little arc from one corner to the next, and then we bounce up and we move to the opposite corner, and we go up to the opposite corner and down to the opposite corner. Do you see that? And we just start drawing an arc, and you can see how this would just go like that. So there is our arc. Now that you know where it comes from with my terrible drawing skills, let me just clear the drawing off the screen, and let's apply it using the tool on the platform. So let's come over here to our drawing tool, go to the Fibonacci spiral. There we go. And we, again, just look for a big, strong move to the upside. I'm all the way over here to the left. Let's just use this one as a gauge. A spiral, because it grows according to that Fibonacci sequence, gets big really quickly. So I'm going to click on click at the bottom of one of these big up moves, and you'll notice this spiral, similar to the one that I just drew, is starting to expand out from my drawing. Let's just go to the peak here. And what this is attempting to do is apply the logic of the Fibonacci sequence in a very different way to the chart. And a trader might anticipate that as we approach these spiraling, these expanding potential reversal points, if a stock has been moving in one direction as it crosses one of those thresholds, maybe it starts to move in the opposite direction, and so on. Does it always adhere to that? Nope. But that's the concept. So experiment with those on your own, but I just felt like as an educator, I want to explain how this spiral is generated and then how it might be applied to a chart. Leave it up to the individual trader to decide whether they're going to use those in their own approach to investing, if they find use in it. But guys, we've done it. This one made me sweat to think about this. Am I seriously going to try to explain all 8 of the Fibonacci tools within the Thinkorswim desktop platform? And I think we've done it. So guys, I hope that was interesting and helpful to you. You can now go and just experiment with these. The biggest thing I think that is fairly universal across the application of all of these is to look for those initial big moves, either bullish or bearish, and then build your drawing around those. All right, Olga, you're very welcome. User says, do we always need 2 points? Bottom and top, top to bottom to use Fibonacci? Not always, no, because like, for example, our time series is a one-click Fibonacci tool. Now, we do look typically for a reversal point, so maybe it's a top or a bottom, but we just click on that and the time series is automatically generated. Journey says we like the spirals better than the lines. Yep, it's always personal preference. My job here is not to do a qualitative comparison of one to the next. It's just to explain how they're built, how they might be used, and leave it to the trader to decide which of the tools that are available that they'll use in their own approach, if any. Eric, thank you. It's always my pleasure to deliver these webcasts to you, but it's time for me to let you go. So as I let you go enjoy the rest of the webcasts that we have a couple more coming up for today. I do want to make you aware of the full slate of educational resources you have available to you from Schwab, starting with, if you haven't subscribed to our Trader Talks channel yet, make sure that you do that. So let me just go right back here to the Trader Talks homepage. Trader Talks Schwab Coaching Webcast is our YouTube channel. You can subscribe by clicking on the subscribe button right below the video right now. It only takes a second to do that. It doesn't cost anything. But this is where you can go to join our live streams. You can find playlists of previous webcasts, or you can even do keyword searches like we searched for Fibonacci's earlier today. Marcus, you say that was a fire hose? Yeah. I tried to introduce just enough detail to help us understand how the tool is built, show a quick application of the tool, and then get a little bit of repetition on your own with your paper money. All right. But I also want to invite you all, whether you're watching live or on the archive, to follow your favorite Schwab presenters on social media. You can find us on X. You can follow us on LinkedIn. You can find Brent there on X at Brent Moore CS. You can find and follow me on X at Cameron May CS. And I make frequent posts here, like just this morning I made a post. If you reply to that post, I just try to reply right back to you. And I do the same thing over on LinkedIn. So you can give me a follow here on LinkedIn. Just go to linkedin.com/in/Cameron May CS. That's my handle. And if you reply here, I try to reply right back to you. That allows for that communication when the camera's not on. That's great. All right, Brent, thanks for helping out. Thanks for all the thumbs up. 89 people watching the live stream right now. 46, it's like half. Excellent. Have already clicked the thumbs up. That's always appreciated. That's like a pat on the back to your presenter. But it also gives my videos a nice boost in the YouTube algorithm, helps people find them. So the more people can learn about things like, what are these 8 different Fibonacci tools on the Thinkorswim desktop platform? How do I use them? Where do they come from? So thanks for doing that. Everybody have a great day. I will see you in tomorrow's webcast or just in a future webcast. I'll also look for you on X and on LinkedIn. But whenever I see you again, until that moment arrives, I want to wish you the very best of luck. Happy trading. Bye-bye.